Hello everyone, welcome to another live streaming as usual with you, trying to help you with your daily market daily trading, basically your education in trading, trying to help you in general assessing properly the markets and strengthening, let's say, your education around financial markets and online trading. So a lot of volatility as usual, right? April, actually the definition of April could have been volatility. Why not? And it is not expected to ease anytime soon, right? So it's the same story again and again, right? Volatility is there. There might be a bit of a damage assessment seen so far today because it's Monday. It was a pretty empty day. The US market has not opened yet, but volatility is there, and we might see volatility returning in the US Open soonish, basically. Tariffs remain the driving force, as we keep saying again and again in our lives, in our webinars, in our videos. And the more fearful thing is their aftermath, their widespread impacts. Okay, not only in the U.S. Economy, but in the global economy. So that's the that's basically what struggles the market. Is a big barrier, is a big uncertainty, and expected to continue to make for a very twisty, windy road over the near term. Even though we have seen that 90-day pause, okay, on the tariffs, something that was announced by Mr. Trump last week, as I mentioned in my live stream, if I'm not mistaken, it was on Thursday. It doesn't necessarily mean anything. We might have this 90-day pause, but there is no near-term relief for the markets. The fear of a U.S. recession is still there. It's back, basically. The odds are more than 50% for a U.S. recession. But it's not only that. I have seen earlier in Bloomberg, because I had the Bloomberg TV on, and I was seeing that Mr. Trump once again tried to, let's say, spread the fear. Not precise what I wanted to mention, but he said that regardless, let's say, after the pause, he might consider adding tariffs in the electronics. If I'm not mistaken, it was I just saw it quickly in the Bloomberg TV. Not quite sure whether that was the exact comments, his exact comments, but nonetheless, what I'm trying to say is that it's still there. The pause doesn't necessarily mean anything. So tariffs, uncertainty is still the driving force, along, of course, with all this ongoing tension with China, the risk to growth in the global economy, and also don't forget the central banks, and don't forget that we have officially entered an earnings season. So everything is basically is in the basket. Everything, we have various factors that contribute to this bearish sentiment, to this negative sentiment in the market. So let's move on. Let me quickly share my screen. Guys, I repeat that this is one of your sessions. I mean, feel free to ask me anything you want. Tell me which assets you want me to cover. In general, how can I help you today? I'm going to go through the usual, the major currency pairs, gold, oil, but feel free to ask me, to post to write down in our question box what else you want me to cover today. Okay, this is the dollar index. Let me just be quick. This is the dollar index. The reason why I'm sharing the dollar index is because we have a clear resumption of the downtrend, okay? So as we can see over here, there was on basically on Friday, just to be precise, guys, just on Friday night. Yeah, on Friday night, it closed actually. No, sorry, 9th. That was Wednesday. So up to Wednesday, we had a bit of a correction, a bit of a consolidation. This is the near term 1 hour chart. Resume another lower low, consolidating a bit or a bit neutral, cautiousness, flat so far today, but however, don't forget that it remains into below basically 2 years bottom, if I'm not mistaken. Yes, broken the three actually retesting the 3 years bottom right now at 99 territory. Retesting is slightly above it. That's the weekly chart, okay, just to show you what we are facing basically. You might okay, the fact that we still have bulls defending this area is something basically that suggests that in the near term we might see indeed some consolidation. This is what we actually see in the near term around this territory. However, if we compare how sharp and strong this decline has been since November, if we compare it with June's decline, October's decline, it's massive. Okay, it's massive. So the fact that we have such a huge weekly candles, along of course with the fundamentals that they support a weak dollar, this level, the 99 level, is expected to break. It has been retested several times. It's expected to break, and we're gonna see doors widely open for 2020 2021 bottom. Okay, a lot of selling pressure on dollar continues in the medium term, in the long term, even in the short term. So this cautiousness ahead of US Open, it looks limited. We are basically, this is the 1 hour chart, okay? If I zoom, yeah, this is the 1 hour chart. It looks like another descending triangle, okay? Which could pretty much help identifying on time the breakout and the resumption, the continuation of the downtrend. So you need to keep an eye, obviously, on the round 99 level. Okay, here we are somewhere here, but a confirm also hourly candle below and outside this descending triangle. Momentum is negative, is a bit due to this consolidation, but it is what it is. We might see stochastic pointing higher, but that's not in line with neither with parabolic SAR, neither with the body of this candle. You can see how weak they are. Even if we slightly see on the open air, a rebound is expected to be limited, okay? We're going to get back to the dollar in a bit. Now, if you allow me, I would like to go back. Sorry. Guys, it's your session. Feel free to comment basically below YouTube or Twitter the assets that you want me to cover and which time frame you want me to check. Feel free, okay? So, yeah. So, dollar struggles, and you can see this everywhere against nearly all the major indices. So there is as you can see, there is some rebound so far today in dollar yen, not a significant one, okay, but there is some kind of the yen has gained some ground intraday at least. So let me just, so you can see that. Look at that. Look at that. That's the daily chart on dollar yen, and you can see that if we have to state, let's say, the current condition, the 2025 condition for yen is just it's just a win situation for yen, and in nearly every single other safe haven. Swiss, I did mention several times this month that Swiss has been one of the biggest beneficiaries. So number one is Swiss franc, and number two, we could say that is yen, gaining ground, reverting basically all these losses that they have suffered since the pandemic. Okay, so in the long term, we cannot really claim that we're going to return back to 2020 territories, but a very interesting, let's say, pattern might be seen for dollar yen. We're gonna come back to it later on in the year. I mean, there is no confirmation, there is nothing, but what matters, guys, for you is to check the latest and the near-term momentum. The near-term momentum, let me just zoom out. I don't know. No, I'm hiding the momentum, unfortunately. Let me see whether I can somehow. No. Okay. Basically, the momentum, at least in the daily chart, you can see that it has resumed and is increasingly bearish. So that's adding to this downtrend. Let me get rid of this. And if I zoom in into the 30-minute chart, because I know that the majority over here is interested in a more short time frames, let's say, for your trading. Currently, the asset is in the mid of an area that we have seen since Friday, okay? But look at that. Look at that. The parabolics are touched, okay? Touched the candlestick. And we have, let's go down to the 30-minute chart. Okay, sorry, my bad. Let me just change doesn't really help me this. Okay, perfect. And I would like to see my intraday setup. Here we are. Okay, perfect. So this is the intraday setup. The reason why I shifted over here is because I want to show you the technical indicators, oscillators that I'm using. So this is the dollar yen, okay, the 30-minute chart dollar yen. And look at that. Small body candles, but look at that. The RSI is flat. Stochastic is turning. It has turned below 8 and is flat, and MACD remains negative. So what that means, it means that for the time being, we have not enough room to the upside. There is not the upwards momentum is running out of steam. So as we move closer to the US Open, basically this will get a bit we're gonna get more clarity. Okay, so however, any rebound is expected to be a limited one. Okay, don't forget that. The asset, look at that. You should draw some lines, some trend lines. This will help you. Let me just, okay, sorry. This will help you identify whether it's time for a, reversal or not. So descending triangle with a flat bottom, weak bullish bias, okay? So keep an eye, because ahead of the US Open, we might see a retest of the top of the trend line before a pullback down to 142 level or even lower. Basically, especially if you are intraday traders, you can find very, very useful the use of Fibonacci extension. So if we see a pullback, then the next immediate support levels are down to 140, 150, and 140.35 territory. This is on the dollar yen. I'm gonna quickly shift to the gold, okay? Because I know that the majority of you basically trade gold, or at least we have some. We have many people trading gold. There were a lot of headlines today regarding the possibility of gold reaching $4,000 until 2026. Okay, this is it's far. I mean, it's in the long term, but in general, guys, the momentum looks to be massive and is not fading at all. It doesn't show any signs of a fade out. So we have intraday, of course, in the short term, we have seen a bit of an ease from record highs, but that's quite logical, right? We have an extreme overbought condition. We have another record high at 32.45 territory. So we have seen the asset easing a bit, consolidating a bit from record highs, but the bullish bias remains, the positive risk tone remains, and the asset is expected to extend its up leg for the time being, from a technical perspective. Okay, remember what I mentioned in my previous live streaming. The new trend that we have, the new uptrend that we have, is this second one over here. That was the initial trend, and this is the updated one, let's say. Now let me just let me get rid of this one. Let me get rid of some lines. We don't need them for the time being. Okay, perfect. So where we're standing, this is the 4-hour chart for gold. I need to update my for gold, 4-hour chart, huge up leg since last Wednesday, and eased a bit. So we have the so-called, let's say, block over here right now. This looks to be like a block. What that's supposed to mean? A ranging market, okay? A ranging market, more or less, between 32.06, 32.45. Now, I'm going to zoom down. Momentum is positive, right? I will ignore the stochastic. They're pointing further to the downside, because the stochastic is for my 30 minutes and 1 hour chart. So I'm going to zoom down to the 1 hour chart to see whether we have any sign of a breakout. Nothing. Neutral. 30 minutes chart, rebounded for the bottom, quite bullish right now, but the parabolics are at the top. So yeah, consolidation expected to continue. According to the stochastic, there is further room a bit to the upside, 30 territory, or even again a retest of the day's highs, but this is pretty much it. What should trigger your attention, and you should keep an eye on, or put some alerts, set some alerts. It's the breakout either of day's bottom or day's top. So that means 32.06 and 32.75 level. Okay, a break, obviously a move above the previous record high, will open the doors further to the upside. Okay, and that implies to an immediate resistance level up to 3,300. Now, however, on the flip side, a pullback, a break of 32.06 could face a very strong support level on April 2nd high, because it's our latest swing high. Okay, that's a very strong, that could be basically seen as a very strong support level on a break below this block, this ranging market, and also 31.6950 and 31.50. That was it. Let me just, yeah, 31.50 as well. These are the next two immediate support levels if and only if we have a confirmed strong breakout outside and below, more precisely, the day's range. Okay, but again, this will be a short-lived one. Okay, so having it in mind, you can alternative use your Fibonacci's. Obviously, it's up to you, but yeah, it is what it is. So, oops, yeah, the outlook doesn't change. Okay, gold remains in demand, and as long as we have further, let's say, comments from Mr. Trump, regardless of the 90 days pause, the gold will be well supported. By the way, guys, it's a short holiday week. Okay, it's Orthodox Easter. So on Friday, if I'm not mistaken, all markets are closed or partially closed. So as we moving closer to Friday, we might see volume to slow down a bit. We might see more of consolidation, not a lot of volatility, and this is because of the holidays. So you need to keep an eye more on your technicals because we might see some profit-taking conditions, okay? So yeah, have this in mind as we move closer to on Friday's holiday. What else I wanted to mention about gold? Not quite sure. Don't quite remember whether anything else regarding gold, but let's get back to it in a bit. So let me just check your chart. Okay, so let's quickly, I mean, no one ask anything, guys. Feel free ask anything you want below our live, either in YouTube, either in Twitter. If you type on the comments, I will be able to see your question and reply. Okay, so I would like to touch a bit cryptos, okay, because we had some technical, very interesting technicals over there as well. So I would like to, there we go. So in general, something that I have said in the past is that a very strong support level, it would be the 72K. We measured it. It was, my measurement back then was based on an M formation. It retested it, didn't break it, rebounded back to 84, nearly 8500 territory. Okay, and it's currently, today is in a bullish momentum, as you can see, extending Friday's gains outside this downwards channel that we have seen. We have seen it trading for basically more than 2 months. I need to readjust it though, because it's now, okay, that's much better. Okay, perfect. So it's above above our channel, trading above the channel, sorry, the initial channel at least. So the 90 territory is the 9050 to 90,500, to be honest, is a strong resistance level, strong ceiling for Bitcoin. But let's take it step by step, okay? So there are some doubts, let's say. If I zoom out, I'm going to zoom out back to the daily chart, whether there are some doubts whether this support that we have seen for the last 3 days in a row is just a correction of this down leg, or whether it's a sign of a reversal, a complete reversal of the down leg that we have seen, of this bearish trend that we have seen since the end of January. Okay, there is no confirmation yet. It's too early to tell. The 90,000 territory, it's the only, let's say, level that could clarify whether we're gonna enter a bullish market again, or whether this is a limited, let's say, rebound. So this week we are seeing, let's say, a Bitcoin facing and testing a key, let's say, a key zone, okay, resistance zone. We have seen the sentiment has improved, okay, because of the pause, but the key question is how long this will hold. So guys, overall, keep an eye on 90,000 territory. Intraday, we have seen bullish bias, okay? So that's limited, and a key resistance could be seen at 90,000. Now, let me zoom in, okay? Let me zoom in into the 1 hour chart, okay? So, just a second. Oops, I'm still sharing. Why am I still sharing gold? This is Bitcoin. My bad. Sorry, my bad. So, what we are facing is, can you see that intraday? This is a consolidation. Can you see that? But it fails, let's say, to extend higher. The momentum has flattened. So, we need to keep an eye on, okay? Because that's a sign that at least that we might, this rally, this support might run out of steam already, okay? Too early to tell. As I said, the key resistance is 90,000 and not the 85,000, is the 90,000. And also something that I want you to have in mind, other than the 90,000, is that on the flip side, let's say, a signal for the continuation of a downtrend can be seen if and only if we see the asset returning back down below, returning below 80K. And for anyone that is a long-term trader, let's say, have in mind that over here, the 72,000 or even the 70,000 territory could hide a lot of sellers, okay? So that's why the asset struggles to extend below it, because this is an area that if it breaks, it could hide a lot of sellers and we could see a sharp sell-off. But yeah, okay, these are hypothetical things, that some lines, some support and resistance elements, important ones that you need to have in mind as we move on in general. I mean, within the month, within the quarter, let's wait and see some levels that could help you setting your alerts. Let's say always use alerts at key psychological levels. This will keep you up to date and will help you spot on time any significant breakout. Either way, as we said, trends are your friends, right? Trends your friend. This is what the idiom is saying, and it's absolutely true. So these alerts help you to be in line with the overall trend and not against it, unless if you wish to go against it deliberately. Now, no questions? Okay. Shall we touch a bit oil as well, or let's check on euro dollar actually? Okay. Yes, touch a bit on euro dollar because it's also an interesting cross, especially after we've seen last week the break of 3 years ceiling, right? We have seen the break of 3 years ceiling over here. The asset remains above it, okay, with the next. So I'm going to put some lines on so they can help me. Okay, and let me just a second, guys, just to prepare everything. But I don't need that one. I would like to use my latest uptrend, up leg. I should be more careful. And also, perfect. So, as I mentioned, we have seen the break of 3 months highs for euro dollar, extends above 114, holds gains, and basically we have seen a reversal of more than 60% of the down leg that we have seen in 2021 up to 2022. Immediate resistance can be seen at the round 115 level. Now, overall outlook looks positive, okay. MACD rising, RSI the same, stochastic, okay, stochastic for my intraday bias, but also don't forget that the body of the candles matter. Now, I'm gonna zoom down to the 1 hour chart, okay, and see where we're standing. Basically, we have a bit of a consolidation, easing a bit. So it seems that there was a bit of a correction, but let me just check something. Stochastic managed to hold above 50 level. You see that? That's the 4 hour chart. Managed to hold above the 50 level. MACD is way above, far away from zero level, indicating that bulls are in control. And the only thing pending is to actually see a strong high Kanashi candle with no tail at the bottom in order to support and confirm this bullish trend will continue. So yeah, that's pretty much it. So okay, that's the 30 minutes chart, but small, weak. Yeah, that looks limited. Yeah, keep an eye, guys, on a breakout of over here. Yeah, latest high 114.25. So that could be the very first sign of a continuation to the upside with the next resistance level at 115 and even 116 territory. Yeah. Keep an eye on that. It's a very strong. There is a strong bullish bias overall. It's just it's because it's Monday, it's the cautiousness, it's the short, it's the lack of economic data. So this was mainly the thing, but yeah. Things might change as soon as US opens, and yeah. Intraday, okay. How many of you are scalpers or 5 minutes traders, 15 minutes traders, and etc.? There is anyone that's a scalper? So that's the 15 minutes chart, okay, for example. And we can see that there is some there was a bit of a pullback actually. However, look at that. That's the 15 minutes chart. Sorry, down, down. Currently, this is still like this has just opened 6 minutes ago, but the lowest bottom, it's higher than the previous one. And this raises question whether this decline has already run out of steam. So if I go down to the 5 minute chart, I can see that yes, indeed, it already finished and it started. Uh, there is a sign of a um, an upwards, let's say, momentum. This is a 5 minutes chart, 15 minutes chart. This is a very fast environment. That's why, and high Kenashi candles actually are useful in this kind of a fast environment. I don't know how many of you are trading in such a tight short time frames, but for sure, high Kenashi can help on these short-lived shifts of the sentiment, right? Limited, already doji. This is bullish. Obviously, there are another 3 minutes until this close, but if it closed like that, I mean, no tail at the bottom, a quite big body, it could suggest a return back to at least halfway, actually. And with the latest swing high, so the next ceiling is 113.78, and so on and so forth. So, guys, very quiet today. I know that Monday's live streaming is not something that you are used to. Shall we check a bit oil maybe or stocks? Let me just, where's my oil? Okay, here is oil. Sorry for that, just a second. Oil has eased basically a bit this week. Actually, something that we have since Thursday and Friday. The decline paused a bit, eased a bit, and basically it has entered a bit of a consolidation for the time being, moving, let's say, retesting, not actually retesting, but hovering, let's say, around the $60 territory. But yeah, if it was the sharp sell-off needed a bit of a correction, and along with the ease a bit of the uncertainty of the fear of the sentiment, we've seen some consolidation. But in general, guys, the sentiment in the oil market, it's negative. It's still negative. Okay, so so you need to keep an eye on for any possible sign, let's say, of a pullback again. And very interestingly, I have seen earlier in the 1 hour chart, let me zoom out a bit. Does this look familiar to you? Does this look familiar? It looks like, okay, not confirmed, we cannot really tell for sure, but it looks to me at least, sorry, a possible, okay, possible, let's say, head and shoulders, but inverse one, okay? It looks possible. It looks possible. With the neckline down to $63. So that's quite interesting. Not confirmed yet, just food for thoughts, just something to keep an eye on for the rest of the week. This is the 1 hour chart. Momentum is slightly better, but still very, very close to zero, indicating that there is not enough steam, let's say, power, let's say, to either to the upside, neither to the downside. So that's food for thought. Very, very important pattern to keep an eye on, because it could let's say, potentially triggers their attention, could basically triggers their attention back to, let's say, back to 70 territory, 71 territory. But anyway, this is a very strong neckline, very strong resistance level. For the time being, it has not been retested, it has not been broken. But I'm saying that in case that we have seen this neckline breaking, and considering that this is an inverse head and shoulders, that's a bullish signal that could potentially uh, implies to a return of oil back to 65 and 70 territory more precisely. Okay, so just something to keep an eye on, let's say. And here we are, 66, 70. But if and only if we see the breakout of this neckline quite strong enough, okay? Strong one, basically. But yeah, just food for thought. Guys, if there are no questions, I will not keep you for long. I think I'm going to call it a date. After, of course, I touch a bit the stock market, okay? I'm gonna let's do Nasdaq. Where's my Nasdaq? Here we go. Here it is. That's Nasdaq. Let me just get rid of that one. It's an old trend line that I had. Look at that, okay? Why I have shared with you the weekly chart is because I want you to see that we had a sign, okay, of a reversal of the 3 years rally 3 weeks ago, 4 weeks ago, 3 weeks ago. Actually, the confirmation came 3 weeks ago. Okay, very, very important to start your analysis from up to down, so from higher time frames to lower time frames. Nonetheless, currently, the key support level, key strong support level is still down to 17,000 territory, because it's a floor that the asset hasn't managed to break since December 2023. The last week, okay, Dow retested 3 times this area but failed to break it, and we've seen a rebound since then, okay? But look at this rebound, but MACD remains negative. Does this ring the bell to you? Look, lower low, right? And lower low in my MACD. Come on. Lower low in my MACD as well. Sorry, I need to properly set it. Here we are. Lower low, lower low. So this rebound is limited, right? The momentum is still increasingly bearish. It's still extending lower. So these such rebounds are considered being limited, okay? Now, if I zoom into the 4-hour chart, a bit like a rounding top, the last 4 consecutive candles are actually small body ones. The tails are like identical at the same territory. So this is basically indicates that it ran out of steam to the upside and we might have a reversal. So keep an eye on the mid of this territory, which is the 1818. That's pretty much it. 660 level, 660 level. Okay. Sorry. Basically halfway. Okay, halfway. Small body candles, momentum neutral. Okay, not interesting for the time being, unless if we have basically confirm pullback. So that's pretty much it, guys. There is no questions as far as I can see, and I have nothing to add. Obviously, as I did mention, overall set, if we have to summarize everything, is weak dollar. Okay, a lot of consolidation so far today, but everything could change as we enter the US Open. It's a short holiday week, so bear in mind that we might see some profit taking conditions and further cautiousness as we move closer to Friday. Stick on your technicals. The overall outlook doesn't change. Gold remains in a positive trend. Dollar remains in a negative outlook. Oil remains in an overall negative outlook. The biggest gainers continue to be the safe havens such as yen, Swiss, pound and euro also are not safe havens, but also found some ground, significant actually gain significantly against a pretty weak dollar. Stocks are under pressure in a sell-off, and any rebound could be limited. The earnings season could help actually stocks limit a bit the losses that we have seen so far, but it's not the overall outlook doesn't expect it to change for stocks unless if the earnings season is surprisingly good, which we don't see, we don't expect, we don't believe that would be the case because the tariffs have already presenting their impact, their negative impact into the economy. Okay. So, guys, that's pretty much it. Pretty empty and quiet day. We had a lot of Fed speeches tonight that could add some volatility. But basically, the attention, the highlight, let's say, of the week is more or less on the US retail sales and on Mr. Powell's testimony on Thursday, if I'm not mistaken, and on Wednesday, Ms. Lagarde is speaking as well. So these are the top, let's say, events of the week, along, of course, with ECB rate decision. Okay, ECB rate decision as well. That's it. Thank you very much for joining me. Hopefully you find this session enlightful. If not, tell us your feedback. We are open to feedback. We want to improve our live streamings in order to be in a way that will be helpful for you and not a waste of time. So thank you very much. Take care. Mr. Trump is just bombarding with headlines, tweets, and announcements. So it's more about politics rather than economic data. Of course, economic data matter, but the main driving force has been and is expected to continue being the politics, the geopolitics. Thank you very much. Have a great day ahead. Take care and see you again basically within the week. If I'm not mistaken, it's Wednesday. Thank you. Bye-bye.